our friend Jim Perry. I want to start local for a minute because he's a Chicago guy too, even though his outlook is global. And the story out last week that Do It Best is relocating True Value's headquarters from Chicago to Fort Wayne, Indiana. Do It Best Group acquired True Value out of Chapter 11 2 years ago, and now they're pulling True Value out of Chicago and consolidating everything in Fort Wayne. The CEO of Do It Best just saying it's a teams-based environment, proximity, the ability to have people together for a critical decision-making body. It's really necessary in our space to do it that way, and it just works better. You know, well, ostensibly you could consolidate operations in Chicago, but they don't want to do that. You know, and this comes upon announcements of Morton Salt going to Missouri and John Deere completing a 1.2 million square foot manufacturing facility in Crown Point, and other companies that have one foot out the door, like State Farm down in Bloomington, companies that are going to go, everything I understand, like WeatherTech, which would be a big loss to Bolingbrook and the jobs that WeatherTech provides in that area, in Will County area. And it's just going to keep going. And the response, I saw this report about True Value being moved to the Do It Best HQ in Fort Wayne. And the response is, Senate Republicans are proposing a legacy tax credit to try to move something to the governor's desk that would encourage long-standing companies, like the Bears, to stay. I mean, really? Republicans are just so inept. That is such small ball. You think that's the problem? How about this? You should tell companies, you should be honest. Try that. Just try for once. You should leave unless we can do big things, because we know all you have to do is have a conversation with some of these CEOs or founders. We know that it's a structural problem, and a temporary tax credit, or even a tax credit that you could extend out on the margins doesn't solve the fundamental structural problems with locating, much less expanding, a business in Illinois. So how about going big as opposed to telling people on the Titanic, look, if you don't use one of those lifeboats, we'll give you an extra night in your stateroom for free. You're sort of missing the point. You're not responding to the exigency of the matter, For goodness sakes. Pathetic. Think big ideas and go promote them. Put a marker down and go sell it. Provide contrast, not backroom deals with these neo-Bolsheviks in charge of this state that are driving business and people away. If this is how it's going to be, what you should say, Republicans, if this is how it's going to be, if this is how you're going to choose, if this is the leadership you're going to choose, then leave. Anybody who can should. That's my honest to good advice for your economic future. If that's the choice we're going to make again and again, the people you see in office now in the city, in the county, in the state, if that's what we're going to stick with, then get the hell out of here for your own good. Don't say we didn't warn you. How about that for a conversation starter? For more on this and other macroeconomic matters, James Perry, founder, CIO, Perry International Capital Partners, joins us. Jim, thanks for being with us. Appreciate it.
Thank you, Dan. Good morning.
Morning. So when you talk to, people in and around Chicago, including CEOs and hedge fund guys and, all the financial services people that you talk to, either that are here or were here, have an opinion about here, what do they say?
The business owners in the city of Chicago, and I'm talking about guys I know who are working in the executive suite, are actively pursuing alternative headquarters and production facilities outside of the state. And the reason for it is the trend in democratic socialism, which is a nice way of saying communism or Bolshevism, is on the rise. And it's on the rise in the big cities, New York, Chicago, San Francisco, Seattle, places like this. And it's anathema to free market capitalism. They think state control is a better deal because they have more power. And I think that rightly, any company that is a public company that has the value of its shareholders at the top of the heap have a responsibility to not decrease profit margins, but to increase profit margins by escaping from a tax regime which is negative for the company's growth.
The New York State tenant bloc, which was headed by C. Weaver until she joined the Mamdani administration in January to take the outside agitation inside the city government. If the landlords can't maintain their buildings, tenants will. The mayor's housing plan directs $2.2 billion to take housing off their hands, relieve them of their housing. Tenants are organized to defend our communities and reclaim our homes. I mean, you've got, because they're institutionalized, you got $2 billion that they're going to use to basically seize property from landlords in New York City. And if that doesn't send a chill, not just to private property owners, but to the business community too. I mean, if they're going to come for landlords, you don't think they're going to come for you? If they're going to pillory Ken Griffin or Jamie Dimon, you don't think they're going to come for you on Wall Street?
Yeah, they're coming, and it's very trendy, and it's probably, we haven't seen peak insanity yet. Wait till November.
Right. And in terms of like the rise of, neo Bolshevikism, so when the response from the alleged opposition party, whether it's in New York or Illinois, is something as tepid as, we'll try to, move this tax credit on the margins, you got to be thinking and talking structural. You're up against an enemy that is operating at the structural level. So that's where you have to operate, the structural level. We're going to propose to completely it's a sort of a common sense counter revolution to these Bolshevik revolutionaries. And that means we're going to forget, returning the state income tax to where it was pre-Ronner. We're going to zero out the state income tax. We're going to reduce the corporate. We're going to do what DeSantis is doing in Florida and propose a ballot initiative. The first $250,000 of your assessed valuation on your home is property tax free. We're going to do big things because that's what's required to send a big message to businesses and residents alike, productive people, that this is a place that you want to be.
That's right. It's not happening because the leadership in this city and this state don't want it to happen. It's as simple as that.
And meanwhile, I mean, not just what's going, but the opportunities that are being missed, the opportunity costs that, you can't measure, so you don't know what you're missing. But I mean, we do know that we're missing a revolution, a positive revolution. I'm talking about technological AI. This is what Jensen Huang, the CEO of NVIDIA, the world's most profitable, the world's richest company, essentially the highest market cap in the world, $5 trillion company. This is what he had to say about what's happening.
Well, let's use one example. I grew up in a generation where we didn't have calculators. I don't remember the last time I did long division. We don't have to do algebra anymore. We don't do surface integrals. We don't do calculus. All of those things are now done by computers. Somehow, everything that I grew up learning is now replaced by computers, and I still find myself insanely busy and working as hard as ever. The purpose of jobs have not fundamentally changed. The purpose of a doctor has not changed. It's to help diagnose disease, bring wellness. The tools they use to do that job will be different.
So I think what you're describing is creative destruction. At the advent of the car, we could not have imagined what the next job would be for the buggy whip maker. He would have looked at a bleak future. He perhaps found some other job, a new job that we couldn't yet envision. You, if anyone, can envision what the next 5, 10, 15 years looks like. So what skills will be valuable to humans?
Well, one of the things that in the next 10 or 15 years, we're going to be building a lot of infrastructure. The first thing that's happened is because of AI, the number of new chip plants and computer plants and data center plants that are being created around the country has just grown tremendously. Electricians, construction, welders, technicians, networking engineers, all of these jobs are now in huge demand. We've created about 500,000 of them. We're probably going to create a lot more. The reindustrialization of the United States is going to change the shape of culture. We're going to have a lot more construction workers, a lot more builders and makers, which is fantastic.
And there's actually, Jim, just to follow up on Jensen there's a new paper out by a couple of, eggheads that work at Econ Labs that they looked at 21,000 businesses to measure workforce data, 21,000 U.S. businesses to measure AI's impact on jobs. And they found that firms that adopt AI heavily grow headcount 10% over 2 years following adoption, while low adopters see no statistically significant change. You're growing headcount because your business is growing and you're trying to keep up. Now, that may not be forever, but at least in the short term, the idea of, all white collar jobs being eliminated in the next 24 months seems unlikely.
Yeah, I mean, this is a central tenet to the industrial revolution which we're undergoing right now. And it's funny, you talk to economists and they're all bearish, but then if you talk to the founders, they're as enthusiastic as possible. And the trouble is that the narrative around this industrial revolution, which we're in the midst of, it's a lot of noise and it's a lot of fear, and it's not a lot of facts. And I think if you really just look at the facts, you can see that the economy is doing very, very well. The labor situation in the States has never been better, and corporate profitability continues to surprise on the upside, And the broadening market, stock market, is really the best sign that says that, the AI industrial revolution isn't just Jensen Huang and his ilk. It's really, industrial companies as well. I think I was looking at some statistics because I thought we were going to be speaking last week. But, last week there was a ton of information that came out that's all kind of under the surface. And the bottom line is that, durable goods orders and job openings and fewer people getting laid off and all this other stuff, every single number is up. Industrial production was up 10% in the first quarter. We haven't had an industrial production number like that in decades, I don't think, So the naysayers about what the economies are doing, it's a little bit tiresome. And the trouble is you see it and read it all the time. And our job, as investors and people that explain the investment part of our lives to your listeners is get to the facts, tell the truth, and let the numbers speak for themselves. And if you do that, you'll see that the economy is expanding, employment is growing, home prices, although not equally up all over the country, are still doing very well. And again, I always go back to the same thing because we talk about employment a lot, Dan, but the labor force in this country has never been larger and has never been more profitable. Their earnings are up higher than they've ever been before. And that's with a loss of something like 350,000 government jobs, which, is a really good thing. So I think we're on the right track here, despite all the naysayers.
Is there anything that does particularly concern you that you're watching closely, because it could be an indicator of choppier waters?
Yeah, I always worry about things. That's what bond traders do. We're skeptics, and we always want to be proven to. I think one of the things that I've been spending a lot of time with recently is this whole idea of tokenization and the ability to run large language models and the amount of capacity that's available to do that. And there's a great chart. It's called the Silicon Data Token Expenditures chart, right? And this, you get used to hearing that. You're going to hear it a lot more. And it basically indicates how much enterprises are willing to pay by tokens, right? A token is sort of like 1 million operations, what they're willing to pay for compute. And the trouble with that is it's been peaking. It's been peaking since it started, 2.5, 3 years ago. Peaked in May, and now compute prices are starting to go down. And people are saying, well, that's the end of the AI revolution. We've got construction and data centers has clearly peaked, and people aren't going to pay for this anymore. And one of these guys, Andrew Feldman, is a CEO of a company called Cerebus, which went public in May. And he was saying that, just do the math. There's 47 million programmers out there, and they're all spending $100,000 on tokens. Do the math. That's a GDP that's going to go up 50% a year for 10 years, and our company's going to be in the middle of it, which is very flimsy math. And I think the problem is that, once prices go up, markets tend to figure out how to get things cheaper. And there may be 47 million programmers out there, but very few of them have a budget that's going to allow them to spend, $100,000 on tokens. It's going to be more like $1,000 on tokens. So the price of compute is going down, and some people would argue that that's a negative for companies like NVIDIA. But really, if you think about Devon's paradox, pricing of compute really is down about 90% since the beginning of the ChatGPT era. But it's up 25% in the last year, and that's of course peak. So I think you have to really be careful about how efficient the AI build out is and how quickly or slowly return on investment can be expected by investors. Make sense?
Yeah, but I mean, the idea that we're at peak AI with respect to the infrastructure piece of it, I mean, how many data centers are online as compared to those in pre-planning?
Right. The numbers are a little bit sketchy, and you have to be a little bit tricky with it because sometimes people have small data centers. But I guess if you just kind of broadly think about it for sort of a 20-second conversation, there's something like 5,000 data centers in the country. And I think the number of data centers that are in the planning stages are 3/4 or 3 times more than the ones that are actually operational.
Right.
So the idea that we're at peak construction in data centers comes from, community organizers that scream about having a buzzing factory around the street, around the corner from their house, even though they're 3 blocks from the interstate and they can hear cars going by all the time. So again, that whole narrative is a little bit sort of, you just hear these things and you just kind of go, what is wrong with you? But the point is, data centers can't go everywhere, right? And they're not going to go in suburban Chicago, right? That's going to be harder, especially in Cook County. But I read something a long time ago that said that the actual amount of developed land in the United States is actually, that's something with at least a parking lot on it, right? Is 3%, right? So this is a really big country, and there's a lot of places out there that have access to cheap energy and cheap water and land and can be used to build data centers, and it's all going to work out just fine. It's just going to take a little bit longer because we've got guys like Pritzker who says, not in my backyard,
Yeah, because I'm running for president. The distribution of your portfolio at present to indicate where you think things are going, particularly in the equity markets?
Yeah, that's right. Always. I put my portfolio on my weekly report every day, and if you know what I own, you know what I think, right? And I'm heavily weighted into the stock market. We've had something like 23 or 24 and NASDAQ 26 all-time highs so far this year. I expect that will continue to happen in the second half of the year. The Industrial Revolution and GDP in general is clearly being driven by the AI super cycle. And I think we're in the early stages of it, Dan. I think we're in kind of, the second inning or something like that. So I really believe it's going to get a lot better. I think it's going to increase productivity, and I also think it's going to increase jobs. So all the naysayers about destructions of jobs have been proven completely incorrect over the last year. The economists are still saying it's going to be a nightmare. But, you talk to the founders. Oh, and again, here it is. We talked about this last time I was on. This whole idea of these opinions and polls about how things are going. If you look at the employment report, 30% of Democrats believe that AI is going to be terribly destructive and terribly bad for the economy, or good. And the numbers of Republicans, the number of Democrats that look favorably upon this are down to 30%, where Republicans are at sort of 50%, and founders of companies, the guys that are doing it, are at like 80%. So listen to the guys that are doing things, not the people that are sitting there on a soapbox talking about things and narrating the way they want some sort of socialist utopia to be. It doesn't work that way. And, I talk about being a bond investor all the time, but, the bond market doesn't care about narratives. It cares about getting paid back, right? And nobody in government thinks that way. So the bottom line is the AI revolution is here and it's real. The industrial side of the economy is doing well. We're overweight that. The technology sector is driving everything. And you have to have a certain little sort of position in the industrial side of the economy. And then, of course, on the retail sales side, we do have an economy where if you're an owner of a house or a portfolio, you're pretty happy. And if you don't, you're kind of in trouble because you're not keeping up with inflation, which has spiked up because of this mess over in the Middle East. But by and large, I think corporate earnings are going to start coming next week. I don't know if you've seen the forecast on it, but, the S&P 500 in terms of earnings, they're supposed to be up over 20% again for the second quarter in a row, which has not happened for a long, long time. And profit margins are running at 15%. So the stock market, is it expensive? You bet. Is it more valuable than it was last year? Yes. Will it be more valuable next year? Of course it will. And the reason for it is the valuations, price earnings multiples are actually shrinking. And some people look at that negatively, but I just say earnings are going up faster than prices in about 3/4 of the S&P 500. So if earnings drive equity prices, then investors should be confident and comfortable that despite some sort of wild dislocation and momentum changes and sector flipping around here and there, software goes down, semiconductors go up. That happens all the time. Meta is down now and Apple's up now. Well, a year ago it was the opposite way. So nothing moves in a straight line. The bottom line is that the U.S. economy is doing well. I just saw last night that the BIS said that the global economy forecast for growth is over 3% for the year, and it was down to 1%, as recently as March 1st. So I think don't get too fussed about the narrative that you hear on TV because it's negative, and look at the data and the facts and the truth and recognize that the U.S. economy is growing. It's the most innovative and creative and strongest economy in the world. Money is flowing into this country. The dollar is very firm, especially against its two major crosses, the yen and the euro. And emerging market currencies are falling too. So money's flowing into the country. Money's flowing into the U.S. stock market. And investors are being rewarded because earnings are rising faster than costs. So I think, you know what I'm saying. That's pretty basic.
James Perry, appreciate the summation. James Perry, founder, CIO, Perry International Capital Partners. Very thorough as always. Jim, thank you very much.
You bet, Dan. Thanks. Have a good week.
You too. And he joined us on the alphawealthgroup.com answer line.
There's only one radio show in Chicago talking about today's biggest stories and telling you what they really mean. That show is this one, Chicago's Morning Answer on AM 560, The Answer. It's news, opinion, and insight at the speed of your life. Streaming at 560theanswer.com on the AM 560 mobile app, or tell your smart speaker to play The Answer Chicago.
8:35, 70 degrees and sunshine in the QC Connecticut.